معرفة.
Bismillah ar-Rahman ar-Rahim. So let us discuss about the contracting parties. So the two main important contracting parties in a Mudarabah are the investor and the manager. The investor is called as Rabul Mal and the manager is called as Mudarab. The other important principle in a Mudarabah is in relation to the conclusion of the contract. It is important to note that because it is important that in a Mudarabah contract, when it is entered into between two parties, there are certain elements which needs to be very clearly mentioned in the Mudarabah agreement. One is with reference to the amount of money, the other is with reference to the duration, and the third is with reference to, if at all it is a restricted Mudarabah, in terms of where the investment needs to be done. The third important principle in a Mudarabah contract is with reference to Mudarabah capital. Okay, the capital in a Mudarabah can be cash, it can be tangible assets. What is important is that at the time of the conclusion of the contract, the cash or the tangible asset needs to exist. You cannot put a debt, to be realized in the Mudarabah as capital. So this is an important point which one has to keep in mind. In terms of the profit distribution, again, this is important that the profit sharing ratio is clearly mentioned in the Mudarabah arrangement between both the parties. What would be the ratio in which the profit would be divided between the investor and the manager, that is between the Rabul Mal and the Mudarab. And another important principle in a Mudarabah is with reference to loss. It needs to be made very clear in the Mudarabah agreement that the loss in the business should always be borne by the investor, that is the Rabul Mal. The loss should not be borne by the manager unless and until there has been negligence, misconduct or breach of trust proven against the Mudarab. Otherwise, if the Mudarab has done its duty, if the Mudarab is efficient enough, if the Mudarab has invested the money with caution, and even then there was a loss, then all that loss needs to be borne by the investor. So this is another important point which needs to be kept in mind. Let us discuss about another principle which is in relation to guarantee. This needs to be made very clear that the Mudarab will not be allowed to provide a guarantee either in relation to the capital or the profit. So there should not be any kind of a guarantee in a Mudarabah arrangement given by the Mudarib, that is the manager, mentioning that I will anyhow bring a profit of this percentage, or the capital in the Mudarabah will never be at a loss. So that kind of guarantee should not be given by the manager of the Mudarabah venture. Of course, a guarantee could be given against the misconduct, the breach of contract or negligence in relation to the manager. So the Mudarib can say that if I do not follow the contract or if I am negligent, then I will compensate the loss. But if the Mudarib has done its duty, then the Mudarib should not be held liable for the loss. Now let us look at the Mudarabah structure. So in this Mudarabah structure, we have discussed that the financial institution or the institution which invests is called as Rabbul Mal. It is investor. In this case, what happens is that the Mudarib does not invest its own capital, but the capital which it has received from the Rabbul Mal. So this is the Mudaraba capital. This Mudaraba capital is being invested in the project by the Mudarib. So the Mudarib, it's using its skill, its knowledge, its experience, its expertise in the venture, and the profit generated from this venture is shared between the investor and the manager, or the Mudarib and the Rabbul Mal, according to the profit sharing ratio which has been agreed upon in the Mudaraba contract. But one important point is that in case of loss, all the loss needs to be borne by the investor. No loss has to be taken by the Mudarib or the manager. But another important point is that the Mudarib should not be paid any salary if the project has incurred a loss. Meaning to say, any income which is given to the Mudarib should only be from the profit which has been generated, because the Mudarib is just investing its expertise and the Mudarib is not sharing in the loss. So the Mudarib will only be given money when there is profit in the venture. If there is a loss in the venture, the Mudarib should not be given a salary. So this is basically how a Mudaraba structure works.